The easiest way to master the market is understanding market structure. Understanding market structure is the foundation of my profitable trading career. In this video, I will guide you from A to Z how to master market structure. And to do this, first, I'll walk you over what swing points are. Then, using this foundation, I'll walk you through how market structure works and how to identify displacement. And after that, we'll go full circle by going over market structure shifts, using the correct time frames, and how to use all of this inside an entry model. So let's get into it. So in market structure mastery, before we're going to dive to market structure mastery, we want to dive deeper into single components, how you can master them. At first, we're going over what swing points are. Building on swing points, we're going over market structure. Then we're going to use displacement to find where does price wants to go. Then we're going over market structure shifts using time frames with market structure shifts. And on the entire foundation, we're going to look at entry models, how you can enter using this foundation. So first up, swing points. Swing points are swing highs and lows. And what is a swing high or low? A swing high is a high with a lower high to the left and a lower high to the right. A swing low is a low with a higher low to the left and a high low to the right. If you want to mark out more of them, this is a swing low, this is a swing high, this is a swing low, this is also a swing low. So now you know what swing points are. And now using these swing points, let's look at what a market structure is. Market structure, you have bullish and bearish market structure. In bullish market structure, you have higher highs, higher lows, higher highs, higher lows, until at some point there is no new higher high being formed and we form a lower low and a lower high, a lower low and a lower high. So this is market structure. Don't overcomplicate this. When price goes higher with higher highs, higher lows, we're in bullish market structure. When price goes down, we have bearish market structure. You also have something in between. When price goes like this, that is called a consolidation. We're going to focus on bullish and bearish market structure in this video. Then let's talk about displacement. And displacement is a big one-sided move with full-bodied candles. And it can be one or multiple candles. And quick tip here, just follow for value gaps to spot displacement. So in this example, we are trading lower. So lower highs, lower lows, lower highs, lower lows, until we see this massive candle. That is displacement. And here's the tip, a fair value gap. That's between this high and this low. That is how you can spot displacement. So now you know what swing points are, swing highs and lows. You know what market structure is, higher highs, higher lows, and lower highs, lower lows, bullish and bearish. And now you know displacement. With these foundations, now you can look at, okay, how does market structure shifts work? And this example, we're looking at with market structure shifts, but I'm also going to use this at the end of this video using entry models. So what is a market structure shift? A bullish market structure shift is when the last swing high that made the low is broken. And vice versa, a bearish market structure shift is when the last swing low that made the high is broken. So to come back to the example of market structure right here, when we made higher highs, higher lows, from the moment that we didn't make a higher high, higher low anymore, that's right here, it's the last low that made the highs broken, then here is the market structure shift in this move. Vice versa here, with a bullish market structure shift, we made lower highs, lower lows, lower highs, lower lows, lower, 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 until right here, we made a low, the last swing high that made the low is broken by this move. With what? With displacement, because full-bodied candles leaving fair value gaps. And here you see the market structure shift right here. So here we turn from bearish, lower lows, lower highs, towards bullish, higher highs, higher lows, higher highs, higher lows. So now you know what the market structure shift is. And some bonus points here. When a market structure shift, so right here, is formed in a key level, you have a very strong market structure shift on your hands. And a key level is a daily, weekly, or monthly PD array. In IST trading, it can be a old high or low, it can be for value gap, an order block, a breaker. In this case, let's say we are just trading to an old daily low right here, and there we make the market structure shift. That is where the bonus points come in. But now maybe you have the question, okay, I know now what a market structure shift is, but a market shift is on the 5 minutes, on the 50-minute time frame, on the daily. Where does this market structure shift need to form? Let's talk about it right now. And a rule of thumb here. The higher the time frame, the more reliable the structure and the price action. So a daily higher highs, higher lows, so a bullish market structure, or daily or weekly lower lows and lower highs, a bearish market structure, is way more reliable than, let's say, a 5-minute market structure. And let's dive to an example to show this. So here we are at the daily and we see displacement upwards. So that means bullish price action. We made higher low, higher high. So on a daily, higher time frame, we are bullish. And what most beginner traders made the mistake is what happens when on the 5 minute or the 1 minute or the lower time frame, there's a market structure shift to the downside. Do we now change to bearish and look for shorts? Or do we keep going higher and you just got faked out? In this example, we tap into a daily bullish fair value gap before going up again. But if you're not using this rule of thumb, on a 5 minute, you would have been faked out and taking a loss. So using this knowledge, so you know on the daily, we want to look for bullish price action, but it means in this area, at this low, you want to see the structure to the upside. What most traders do before that, they think, oh, well, on the 1 and 5 minute, we have lower price action coming up, so I'm just going to short the whole time. And they will all get stopped out by these candles. So let's drop to the 5 minute to see what that means. So here we are at the 5 minute time frame. Same price action. Here is that massive daily bullish fair value gap, but now in the 5 minute, we here have a bullish market structure, higher highs, higher lows, but now we are creating bearish market structure. So the market structure shift was right here with displacement, fair value gaps. If you cannot spot the fair value gaps, they're right here. Fair value gap 1, fair value gap 2, and we go lower. So from this point, you might wonder, well, let's just go short. The market structure is short, now I can just keep shorting and shorting. But you need to have the higher time frame in mind. So what happens when price trades lower towards that daily bullish fair value gap? There is where the high probability setups come in. Because if your market structure shift is in line with the daily or with the weekly or with the monthly, so let's say the daily is bullish, a market structure shift to the upside is the easiest trade because you trade with a higher time frame order flow. So here the market structure shift was not the best one because it was counter order flow. The highest probability trades will come when you do it with the order flow. So let's see an example. What is the last swing high that made the low? That was this one. And then we leave a fair value gap, see displacement, then we move to the upside. And there is where your high probability trades come in towards the upside. So now you know how to combine time frames with market structure shifts. So bonus point if you can use market structure shifts in the same direction as the higher time frame. And now with all this discussed, let's look at a very easy entry model you can use based on this foundation. And for that, we go back to the example on the market structure shifts. So when this is in a key level, that means we are bullish on the daily or the weekly or monthly. So we trade into an old daily low or an old bullish fair value gap right here. And there you have the market structure shift. So in this area, you can look for lower time frame longs. So you can just take a long here. You can take the one of these highs here for 1 to 3. So that could be a nice setup. And we are at the 4 hour here, guys. And most of you are intraday traders. So also you can take a trade in this fair value gap to the upside for also 1 to 3. This is all swing trader territory. And I know most of you watching here are not swing traders. You're intraday traders or scalpers. So let's look at how you could find an entry on the lower time frame using this method. So on the 4 hour, you are in a market structure shift. So in this area right here, you knew we have a market structure shift. So we want to go upwards. So let's look at this piece of price action at the lower time. So here we are at the same 4 hour bullish fair value gap, what we mentioned in the higher time frame. We're now at the 5 minute time frame. And what you now see is we made a low into a key level. What was the key level? The 4 hour bullish fair value gap with a bullish market structure shift with displacement, leaving multiple fair value gaps right there. Also right there. So intraday on the 5 minute time frame, this is during the London session. You could take an entry right here from this fair value gap, stop below the low, take profit above the high for almost a 1 to 3. That's option 1. You could also take it in this fair value gap right there. You can put a stop below this swing low for 1 to 2. Or if you miss all those moves, there's another fair value gap created right here. So if you take that one, top the fair value gap, you are in some drawdown, you put your stop loss below the last swing low, that's right there. And you could target the 1 to 2 or 1 to 3. And you would have taken a nice trade as well. And this is all intraday, but based on a higher time frame, market structure shift, following displacement, following swing points, following market structure, and all the different concepts you now learned. If you enjoyed this video, I'm sure you will enjoy the 2024 and 2025 mentorship here on this channel. I know there's only 20% of you watching subscribe to the channel. So I could ask you for a small favor. If you like the channel, and you like the value you receive here, and want to support me, the best and easy way to do this is hit the subscribe button. And my commitment to you is to make every next video better than the previous one. Thanks for watching, and I'll see you in the next one.